FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz. And are you ready for another installment of What's Not Imploding Now? Wednesdays with Andrew Hoffman. The date is October 14th, 2015. Shout out to my daughter for her birthday. And Andy, things are pretty bleak. Gold and silver doesn't look like they're being held down any longer. Or if they're being held down, it's not working too good, is it?
Oh, well, they're certainly being held down more than ever. You look at the same patterns. We're still at 90% of the days, the 2:15 a.m. attack. They actually tried one of their late night attacks 2 nights ago. That failed. And the same old thing. Yesterday was 10 a.m. Eastern Standard Time when they stopped the gains. It's not like they're not there doing their thing. The problem is that, like you said, they're fighting an uphill battle. It's like Atlas, holding, Sisyphus, I was referring to, pushing the big boulder up the hill, which is where they stand right now. Because, no matter how you slice it, we're at record demand, which is only getting larger as time moves on and more central banks print more and more money. And the inventories are probably as low as they've ever been. Whether you're talking about official inventories or institutional inventories, it's not there. And of course, now we're going to see major production declines. In fact, I've been talking about peak gold for the past year. I've been practically screaming it in articles and podcasts that we've reached it now, and no one seems to be writing about it. And then voila, today, Goldcorp puts out a chart saying that gold will peak this year, production, and fall, get this, 20% in the next 5 years, gold production. And, it's not like I haven't been showing people that Barrick, the biggest gold producer, is supposed to drop by 50% over that time, their production. And no one's been talking about peak gold, but it's here. There haven't been any discoveries in 15, 20 years in this business, partly because the low-hanging fruit's been found and partly because of capital starvation from the gold cartel suppressing prices for so long. You've also had starvation of labor. The same thing happened when I worked in the oil industry. They came off 20 years of bad times. There was no more geologists and engineers, and the same thing has gone on with mining. There's been no one in the business. Everyone's retiring, and it's harder and harder to do things. And of course, now it's harder and harder to get things done because all the countries, there's environmental permits and taxation issues and of course, more difficult technology. So my belief personally is that not only is this peak gold for now, I don't think we'll ever approach the kind of levels of gold production that we've had over the last decade, ever. I don't think there's even enough gold out there. And I don't care if the price doubles and triples, there's not going to be enough gold out there to get production up anytime in this lifetime. And of course, remember, once gold and silver do in fact break from the cartel, just like they have every time in the past, they've been held down, like the London gold pool, it'll be because they're remonetized in the eyes of the world, and therefore the governments will start to nationalize and expropriate mines. And the next thing you know, the governments hold these things and they destroy them, just like they destroy oil fields and anything else they own. So again, we are talking about peak production of gold and silver. And silver, it's going to be even bigger declines because half the silver in the world is the byproduct of copper, lead, and zinc mines, which are all going to be shut down. And unlike gold and silver, the prices aren't going to go back up. So again, we're talking about record demand, record low inventories, and guaranteed declines in production for the foreseeable future.
Hey, and by the way, that reminds me, got a question from one of you out there by the name of Grant. He says he's got a number of 100-ounce silver bars that were bought that he is ahead on, has a profit. What's your opinion what Grant should do with them, Andy, if it were you? Obviously, you can't give personal financial advice, and this is a hypothetical strictly.
Yeah, well, I mean, it's not financial advice. And, I'm assuming he's asking not about whether we should sell them, which, of course, the answer is no.
Trade them.
But whether we should reallocate them to other forms like 1-ounce coins. And, look, at Miles Franklin, we've forever, recommended that people focus on 1 ounce coins because they're the most liquid. Yes, you pay a little less for 100-ounce bars, but they're far less liquid. People don't want them as much. Not that, look, if the price of silver soars, yeah, they'll do fine. And, depending on the logistics and the costs of doing so, you may just say, what the hell, I'll sit on them. But, in an optimal world, your portfolio is going to be principally 1 ounce coins. As far as what I have personally, gold and silver, it's all 1 ounce coins. And in silver's case, I have a little junk silver as well.
Well, given his druthers, hold, sell, reallocate, assuming he can reallocate, sounds like a good idea. What you would do if it was you in that situation?
Well, he certainly can. Call Miles Franklin and send us your bars and we'll, put them into 1 ounce coins. The thing is, there are costs involved to do that and logistics depending where he has it and all that stuff. So, it's up to you personally what you want to do. It's not the worst thing in the world. I'd rather have 100-ounce bars than pretty much anything else on the planet. But if I had a choice, I would have 1 ounce coins.
Yeah, given your drug. So silver is silver, but there's a portability factor with the 1 ounce coins. There's logistics. There's demand functions too, because 100-ounce bars are not what people are really looking to be having these days.
Yeah, well, again, like people talk about, the closed-end funds or the GLD. Oh, I can always take delivery. Yeah, you could take delivery of 1,000-ounce silver bars, but no one wants them. They trade at less than spot. Yeah. And you want to lug around 1,000-ounce bar? 100 is a big difference from 1,000. But again, just like anything else in life, there's a premium on liquidity. And, we think, I certainly think that 1 ounce is where the fulcrum is. Because, yes, you can pay even more, for instance, like for a 1/4 ounce gold coin. You'll pay a huge premium on that. But what's the real benefit? It's not like you're going to barter with a 1/4 ounce coin. If you really want to have something barterable, the only real barterable coins, in my opinion, are junk silver. Everything else is just, a variation of the asset class. And I think, for the best combination of price and liquidity, I think 1 ounce in both cases serves you best.
Yeah, well, that makes a lot of sense. I'm inclined to agree with you. 100-ounce bars, they're compact, easier to store, I guess, but they're not really going to be liquid or barterable. It's basically right now at current silver price of around, $16 an ounce. It's like having a $1,600 bill that isn't going to quite fit in your pocket. Actually, the price now is around $14 or $15. So, it's $1,615 in your attaché case.
That said, I expect silver prices could potentially be $1,000 themselves one day. So really, what's the difference? But and certainly, even if they're $50 an ounce, a 1 ounce coin is barely barterable. It's not like you're going to buy groceries for $50. Although who knows what things are cost. But again, these are all mood issues. A 100-ounce bar is going to be fine. It's just not optimal. That's all.
Yeah, I gotcha, and I really agree with you on that. I'm looking at eBay at these bars right this minute, Andy. They're selling. These are the bullion dealers are selling them 1774.69, 1849.12 at Atmex, and that's a Johnson. We're talking Johnson and Matthey here. The Engelhards are going for upwards of 1900, 1913. Why does Engelhard sell at a higher premium than Johnson and Matthey? I don't get it. It's a nicer looking bar.
Yeah,
but
this is an area where, you better served asking Andy Shackman. I do know that one of those, I think Johnson Matthey stopped making bars, and I don't know if Engelhard makes them. I'm not even sure because I don't get too involved in this kind of stuff. But, you do have scarcity issues. You do have numismatic issues. You do have just general likings of certain coins versus others. When it comes to gold, there's not many choices out there. There's the government issued mints, pretty much that's it. There's no generics to speak of. In silver, you have a lot of choices. And I've always, people have said, well, what do you think of buffaloes and rounds? And look, I have plenty of those. I'm not against the rounds. Ultimately, my belief is that, once gold and silver become in vogue, it'll be like tech stocks back in 1999. Everyone will understand that a buffalo is 1 ounce silver, and it's no more likely to be counterfeit than a 1 ounce silver American Eagle. But until that time, there's big premium differences. And so Miles Franklin, I think the way we've always put it is the core of your portfolio, when you're building a precious metal portfolio, should be, in our view, the most liquid types of coins, the most well-known, and preferably in 1 ounces. So, if you can have a lot of eagles and maples and philharmonics, and then, you can, once you have your core, then you could sprinkle around it some rounds and maybe 100-ounce bars. And if you're into numismatics, good for you. You can do a little of that, or maybe some platinum, whatever makes you feel good. And of course, everyone must own junk silver. That is, if they could find it. We have found these limited edition maple leafs and Perth mint coins to be great. Like every year now, the Canadian Mint's been doing these wildlife series and bird of prey series where they'll just issue 1 million, let's say, red-tailed hawk coins, which are essentially maple leaf coins.
Right.
And when every time they've come out, they've been at pretty much the same price as a regular maple leaf, and we've said to everyone to buy them. And then, sure enough, as time goes by, the premiums go up because they're scarce. But we never, ever recommend, especially to a novice precious metal investor, anything that's, quote, numismatic, because, again, the whole point is to protect yourself from the objectivity of financial markets, or the subjectivity. You want the object, as much of the objective melt value as you can get in your hands, which is the case, when you're buying bullion coins, and even more so when you're buying rounds, which have lower premiums. So again, it's as much an art as a science, but in the end game, we're here to protect ourselves, not invest, which means getting as much metal as you can for as little money as you have to pay for it, or I should say as little fiat currency.
Yep. Yeah, and fiat ain't what it used to be, that's for sure. So getting back to our subjects of the day, earnings, major earnings disappointments all are abounding all over the place. Nothing.
I mean, who would have thought that, right? We've had downward, meaning year-over-year declines in S&P earnings for several quarters in a row, and that was before they started really laying off people and commodity prices started really collapsing, and measures of trade global trade hitting new lows. I mean, the Baltic Dry Index this week hit its all-time low for October. Remember, it's a seasonal index, so it goes up and down sharply throughout the year. Well, we hit an all-time low at the low point at the beginning of the year, and now we just hit the all-time low for the fall right now. And that's, you'll see this across the board. You look at a company like Caterpillar now, 33 straight months of declining earnings and laying everybody off. This is the biggest, mining, manufacturing type equipment supplier in the world. So, of course, we're going to see collapsing earnings now, worse than ever. And yeah, I mean, last night, even JP Morgan miserably missed earnings, and they can pretty much make up whatever they want. And Intel, and I mean, you name it, this is going to be the worst earnings season since early 2009.
Yeah.
And yet they're still trying to hold stock indices at all-time highs. And look, by hook or crook, whether it's by nominal terms or meaning either by hyperinflation or by 2008 stock crash, all these gains in stocks are going to be gone. There's not a doubt in my mind. And whether it's with Dow 160,000 or Dow 1,000, you're going to lose your shirt in stocks at these levels. The PPT around the world is losing. I mean, most of the markets in the world are in bear markets, and eventually even last to go markets like Dow Jones Propaganda Average will join the party too. And sure enough, during this time of deflation, what do you know? Gold and silver are rising while everything else is having trouble treading water. Again, breaking the myth of deflation. Remember this morning, for instance, they're saying the odds of a Fed rate hike have plummeted because of this horribly low negative producer price index. And I'm going, well, wait a second. I thought gold and silver are supposed to go down because of deflation.
Yeah.
And, it's nothing to do with deflation. It has to do with destruction of currencies and destruction of economies. People are fleeing to safety. The cartel has spent 15 years trying to prevent the prices from reflecting that. But as I said, we are at record demand, record low inventories, and no production coming out of the ground because of what they've done. This is the perfect storm from an investment, from an economics 101 perspective of why you would buy gold and silver right now, let alone as the money printing has just started.
Yeah. Oh, yeah. They're just getting started now, and it ain't going to be pretty for sure. Hey, what about this 2.7 trillion of lost debt by the Fed?
Yeah, what's as my article was called, what's another 2.7 trillion among friends? With quotes around it. We just found out yesterday in yet another data series at the St. Louis Fed, which puts out all of the Fed's voluminous data, is discontinuing. Coincidentally, they recalculated and realized that the total amount of debt in the nation, when you combine, consumers and municipalities and the government, they were short by 2.7 trillion. Sorry, we carried not enough ones on our addition. It just shows you again the loss of credibility, as I call it, the credibility implosion, the end of the belief central banks can save us. People are looking at this stuff. The whole world is looking at it and going, wait a second, not only do you have this massive debt, you don't even have any idea what it is. How are we supposed to trust that your unemployment data, that your inflation data, that your GDP, that anything that you put out is true, let alone your expectations for where the economy is? Remember, it was in December 2014, we're talking about almost a year ago now, where Janet Yellen said we would have a Fed rate hike by March 2015. Well, here we are in October 2015, and after today's horrible retail sales and PPI data, there's now a less than 50% chance of a March 2016 rate hike. Of course, I've said all along there won't be one ever. The next rate movement will be down when we go to NERP. But the fact is there are still people that actually believe this BS, that the Fed can increase interest rates when the Fed has more exposure due to its $4.5 trillion high duration bond portfolio to rising rates than anyone on the planet. It's like playing Russian roulette, except all of the chambers are full, would be if they raise interest rates, which is why I wrote last week or last month. I wrote the only thing as financially cataclysmic as the yuan devaluation would be if the Fed raised interest rates. They are never, ever going to do it. They will lower interest rates below zero, and they will institute QE4. And when they do institute QE4, and I'm not talking about the covert stuff they do right now, like printing money and supporting the Dow. I'm talking about when they're forced by crashing markets to come out and say, yeah, there isn't really a recovery. Things are getting worse. We're going to have to do $100 billion per month, QE, and it's going to be to buy stocks, not just bonds. When they do that, it is all over for all semblance of hope for the global economy, for the fiat currency regime. Then you're going to see the hyperinflation, and then you're going to see what's left of the gold and silver that's above ground off the shelves in a millisecond, never to be found.
So much for hope and change, huh?
Hopium, yes.
Yes, just the drug that you don't need at this point, because things are definitely taking a turn. Hey, what about what's going on with the derivatives meltdown here? It's taken place before our very eyes here, Andy, and the greatest story never told.
And who knows is the question, right? When you think about how much these guys have perverted financial markets and economic data, like we're talking about this 2.7 trillion. I mean, remember, the whole thing fell apart in 2008 because of supposedly the derivatives blow up at AIG and at Fannie Mae and all these things. And meanwhile, here we are 8 years later. We know the amount of derivatives is far more. In fact, it's become ubiquitous in economic accounting and policy and government policy, the way they manipulate markets. I would bet that derivative usage now is at least 2 or 3 times more than it was back then.
Oh, easy.
Except that they hide most of the stuff off balance sheet and they don't talk about it. But of course, these things are going off left and right. Someone's got to lose when you make bets. That's why Glencore is such a big deal. Glencore, because of all the money printing and the Wall Street financial engineering, it went public after 2008. It's got its $100 billion of debt. It probably has more derivatives than anyone on the planet. and that's why they're desperately trying to support copper and zinc prices, which is where it has its biggest exposure, because it's going to blow up Lehman style, probably bigger than Lehman, and many others like it. In fact, it's got a twin brother called Trafigura, which is equally leveraged to all this stuff, except it's not public. You see its bonds are crashing like Glencore's, but there's no stock to look at, so people don't realize how big this commodity trading derivative manipulation machine is out there. And then you look at the banks, you look at that massive loss at Deutsche Bank that was just reported this week, or they pre-announced it.
$7 billion after taxes.
Yeah, everyone knows Deutsche Bank has the largest derivatives book in Europe. In fact, I remember it was 2 or 3 years ago, the vice chairman of the FDIC over here, because he has to look at all the banks like Deutsche Bank, he said that they were horrifically undercapitalized. And and look what's going on. And then you see Credit Suisse just did this massive capital raise this week because they are undercapitalized. And who knows how much of that is because of derivatives and exposure to oil prices and copper prices and interest rates, which, by the way, if they moved up, would cause the biggest derivatives explosion. And you'd hear it from the next galaxy if interest rates went up, all those interest rate swaps that are out there betting on interest rates being held down by central banks. So again, who knows what's going on behind the scenes? But the fact is, the banking sector, look at Deutsche Bank, look at Credit Suisse, now look at the JP Morgans of the world missing earnings and firing people. I mean, no one's firing anyone more than Wall Street right now. I thought Wall Street's doing so great. I mean, the Wall Street I grew up working with, doing analysis and capital raising, that died long ago. Now it's all trading, inside information, carry trades, taking the Fed's free money, and that's not working anymore. So if the banks are falling apart, they're too big to fail banks, then who's going to bail them out if the Fed has no more credibility or ammunition?
Good question. And there's nobody there to save us. What the heck's going to happen next? We're
going to save ourselves. Obviously this record amount of gold and silver buying shows that there's plenty of people out there that are starting to think that way. Unfortunately, it's probably just 2% of the population. But yeah, the alternative media is getting larger with each passing day. People are buying guns. Those MRE ration companies are doing very well. Gold and silver demand is doing well. People are fighting back. There's all these votes everywhere. Look at the Catalonia, for instance. Yeah. I mean, there's going to be more and more people that are trying to preserve themselves as time goes by. The worse things get, the more they need to protect themselves. And that's why you got to do it before everyone else does it.
Yeah, well, for sure. I've had that emergency preparedness food for several years now, since we had a sponsor who gave me a real great deal on it, but I can't emphasize it enough. Got to at least have a few weeks worth, right?
Yeah.
I mean, at least
and again,
a few weeks.
When I say preparation, I don't necessarily mean for Armageddon. I'm saying that there are plenty of people out there that are starting to fear. I mean, that's what Andy Schectman was talking about in our physical bullion market update last month, about he's never seen in 20 years of doing this, where this many people had this much fear, some of it rational, some of it irrational, but all linked to this general unease that something very bad is happening and will be happening. And whether you're talking about the ultimate preparation like food, or simply managing your money differently, or where you live, or who your contacts are, or how you work, or your debt situation, the fact is that people need to do things while they still can, because it won't be long before a lot of the things that you can do now, you won't be able to do. And a perfect example, by the way, is in 2008, when the world ran out of gold and silver for several months. And if it weren't for the powers that be having the ammunition and credibility back then to print their way back to some kind of normalcy and get the precious metal markets to eventually calm down, then it would have been too late. And there's no doubt that this time around, there's far less metal out there, far more demand, and there's absolutely no way, there is not a chance in hell that when this thing goes down, that the central banks are going to be like, well, we're going to do QE4, we're going to lower interest rates to negative, and the government's going to do a big fiscal stimulus program, and everything will look great. Not all that. There's no money for that. There's no credibility for it. The printing presses are only going to fuel hyperinflation this time around.
Yeah, it's getting to the point where you really need to have a plan B and a plan C Look, we know that your plan in all likelihood is not going to work out, but you will be that much further ahead of anybody who doesn't have a plan, which is most of the planet and the universe here. So prepare. And to the trolls who say gold's going to 500 and silver to $5, well, you've been saying that for how many years have they been saying this for, Andy? And I don't see it happening.
$500.
Yeah,
There wouldn't be, if we went under 1,000. There probably wouldn't be more than a handful of mining companies on the planet operating. At 500, there wouldn't be a single miner of any kind, of any metal.
Yeah.
Not a single miner operating on the planet at $500 gold.
Yeah.
So yes, if you want to believe it's going to 500, great. If it does, you better own whatever you can, because it's going to be, if I just told you that we're going to have a 20% drop in industry supply in 5 years under current conditions, what do you think it's going to look like if gold was $500 an ounce? We're talking about there would be a 50% drop in gold. And it would probably mean, by the way, that like copper prices went under $1 and zinc prices went to a dime. And it would probably mean silver production would fall 80%.
Mm-hmm. Yeah, well, hey, I've been hearing it for ages. And, you know, when I say, well, somebody come on here and let's hear the argument for it, I can never find anybody.
No, they don't have it. It's fear mongering. Mm-hmm. It's people who are, people who see the price down. So they, I won't name names, but there's plenty of people out there who the sole basis of their business is to fear monger. If prices are going down, they say they're going to really go down. You got to be a sheep that jumps on this train. If they're going up, they go, well, they're really going to go up. So you better buy with hands over fists. I mean, that's human nature. That's playing on human nature. And some of the most famous people in our business, that's their entire game plan.
Yeah, well, not a good move. Hey, here's something that just came out from the Wall Street Journal as we're speaking. Walmart predicts a sharp drop in earnings and stock slides. And it says the giant now expects sales growth for this year to be relatively flat. Hey, thank you very much for cutting back on food stamps, major source of the big W's profits for sure. The company had called for sales growth of 1% to 2%, also pointed to bigger than expected hit from adverse foreign exchange rates, and Walmart hosting a meeting of analysts today, said it projects per share earnings to decline by 6 to 12% in its next business year. That's Walmart, the largest retailer on the planet, one of the third largest, 3 largest, 5 largest companies on the stock exchange. Toast.
And the retailer to the 99%.
Yeah.
The ones that are supposedly at a record low unemployment rate.
Yeah, isn't that great? Yeah, well, we've only got less than, I think it's 5.3% unemployment. I don't know what the problem is, Andy.
Yes. 5.1 actually. And the problem is that it's, first of all, like we said in the beginning of this podcast, any number the government puts out is a lie. Every single thing. There's not a shred to any of the, forget the background, like the fact that it, the way they calculate it, they don't count someone who's out of the labor force as unemployed. Forget that stuff. The fact is, all those numbers they put out are complete fabrications. It's even been proven. We've had whistleblowers. The guy that came out who worked for the Census Bureau who said, yes, we were instructed on the jobs report before the 2012 election to make up the data to make the jobs, the unemployment rate go down. But, again, it's like, all the whistleblowers that have come out and admitted, including a bunch of central bank chairmen, that gold is manipulated. It's like, all right, let's just ignore it. Let's ignore the truth.
Yeah, funny how things work in the real world. You got to get real right now. Go over to milesfranklin.com, subscribe to Andy's daily missive and his audio blog. While you're at it, financialsurvivalnetwork.com. You'll get a good reality check there. Hundreds of articles posted weekly by our webmaster, Stefan, who spends hours and hours a day finding you the articles that all the others don't have that you need to be aware of. And while you're there, sign up for a webinar, because one of the things you need to do is reduce your debt. And we're having a webinar. Just sign up on the newsletter. You'll automatically get notice of it, called How to Pay Off Your Mortgage in 5 to 7 Years Without Really Trying. And Andy, we will talk to you next week.
Looking forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.